I was making a whopping $35,000. I was running their youth programs, like the camps. Saved up cash, bought a duplex, $125,000 duplex, did everything wrong, all the mistakes, raining inside my house, you name it. But I sold that property 3 years later for $100K profit. And I was like, okay, now I get it. I get the real estate game.
Most partnerships end poorly. And so was there ever a moment early on where you thought like this might not work?
No, I've never thought that it wouldn't work out. It's kind of like being married without being married in a way. If you have a skill set and you're just starting out, giving that skill set away for free for a period of time and showing people what you can do allows you to open up and get into rooms that you otherwise wouldn't be able to get in because you think that you're worth something because everyone wants to get paid.
What's the one thing that moves the needle the most and gets people over that analysis paralysis and get that first deal?
Knowing that no matter how many times you analyze it, you will always and can always find a way allows you to think that it won't make sense.
So you've had 384 conversations with different guests so far. Is there a theme or pattern that you continue to see? What attributes do you see among those who are most successful?
I don't want to be like cliche about this, but I think...
What's up, guys? Welcome back to another episode of The Lowdown. Today, I have the pleasure of introducing Cory Jacobson. He and his partner, Ryan, have built a real estate business of 80 units together. They've also built a podcast and have consistently shown up for almost 400 episodes. That kind of consistency doesn't happen by accident, and it doesn't happen alone. Cory and Ryan also host the Wealth Juice podcast and run their own real estate community, helping people land their first rental. So, Cory, it's a pleasure to have you on.
Lorenzo, thank you so much for having me on, man. This is awesome. I love being on the other side of the mic, even though most of the time I'm doing the interviewing. So let's get into it.
Of course. So before we get into the real estate, before we get into the podcast, I want to go back to the beginning. When did you and Ryan first meet, and how did this partnership actually form?
All right, I'll try to keep this brief. So I'm 34. I'm in Philadelphia, and I started investing in real estate when I was 26. So I did something very simple. I was actually working for the Philadelphia 76ers at the time. And I always tell the story of like, you know, they pay the players a lot more than the rest of the people at the organization, as they should, right? Because they're the ones bringing in the money. But I was making a whopping $35,000. I was running their youth programs, like the camps. So much fun. I had a blast doing it. But I needed to make more money, like straight up. I needed to figure out a way that I could grow my income. And my boss, who was a real estate investor on the side, said to me, you know what you should do? I can't pay you much more. It's not in the budget, but what you should do is you should buy a 5-bed, 3-bath and rent out the bedrooms to other people that work here because they're all in their like early 20s. It's like, okay. So I took his advice somewhat. I bought a 3-bed, 2-bath. I lived in one of the bedrooms. I rented out the other 2 bedrooms. I bought this property for $250,000, which I know is like an impossibility in your market, but in 2018 it was possible here. Property's probably worth like $415 today. But most importantly, my entire mortgage was covered by the other 2 rooms, $750. I live for free. So it allowed me for the first time ever to actually like save up cash. Saved up cash, bought a duplex, $125,000 duplex, did everything wrong, all the mistakes, raining inside my house, you name it. But I sold that property 3 years later for $100K profit. And I was like, okay, now I get it. I get the real estate game. Cash flow is awesome, but the appreciation and the forcing of this appreciation allowed me to have these big chunks coming back to me. So that's when Ryan and I were like, I went to college with Ryan. He was a good friend of mine. He's like, dude, I see what you're doing. Let's do this together. So we started a podcast. To share our story. He bought a primary residence. I was house hacking. I had the 1 unit. We just started talking about personal finance, real estate, and just hoping that people would follow along and just listen to what we were talking about. Not from a standpoint of we're trying to teach down to you, but just like, man, this is all the shit that we're doing wrong. Like, hopefully this resonates with you. And before you know it, we stuck with it. We started having cooler guests on. We grew. And then our real estate portfolio started to grow because of that, because of the rooms we were able to get into. So I can go into any way of how we grew it, but that's the origin story of getting started.
So just to summarize, you guys started off as friends first. You bought your first rental, you house hacked it, and then Ryan kind of got inspired, and then from there kind of just went from there. So Most partnerships end poorly. And so was there ever a moment early on where you thought like this might not work?
No, never. Ryan and I keep it's kind of like being married without being married in a way. Like we knew that going into it. And as long as like our communication level is kept at the forefront and we have this aspect of like, I will never put dollars and cents over our relationship because to me, it doesn't matter to me if I'm making an extra couple $100,000 a year. If the people in my life don't enjoy being around me, and I don't have integrity, and I can't do it with people. So Ryan and I were like, look, we're going on this journey together. So there was never a point where I thought, hey, this wouldn't work out. But the continuous alignment every month and figuring out like where we're going has to be repeatable. Like Ryan has a child and another child on the way. He's at a different stage of his life than I am. So I left my full-time job to pursue our real estate company and our mentorship program, and Ryan is still maintaining his job because he's in a different stage of life. But we're still in this together 50-50, and we've grown significantly from the commitment to do that. So I think a lot of people think partnerships fail, but it's not the integrator versus the visionary, like that conversation. It's, do you implicitly trust each other with bank accounts and with social security numbers and all the stuff that like goes into having a real partnership, and like I trust him with my life. So I think as long as that's at the front, I think the other stuff can be hired out or figured out. So no, I've never thought that it wouldn't work out. We've gotten into other partnerships that didn't work out, but we always come back to like, all right, man, we're in this together. And it really, really helps you when you have down days and to bounce ideas off of a partner, and knowing that like, as long as you're both not struggling for a period of time together, it just makes it more fun, in my opinion.
Yeah. Well, it's great that you guys already started off as friends. I think there's already a level of trust that was built before you guys got into the business partnership. And so what advice would you give to someone who doesn't have that friendship first, is looking for a brand new partnership? Maybe they're looking to grow, looking to scale because they know it's too much to do everything themselves. Like, what advice would you give for people looking for a partner for the first time?
I think you have to give without any expectation of anything in return. And that sounds like, great, Cory. Like, what does that mean? Well, I'll bring it back to my basketball days. So I was a coach for a long, long time. And I recently, in the last year, had to stop coaching because our business is going in this upward trajectory direction. And I love coaching. I'm going to get back to it. But I remember when I was first starting out, like 25 or 26, and I was coaching, I offered to coach for free on a very, very high level prep school basketball team who has multiple guys in the NBA. And just, every single year, seven plus Division I players. And I said to the head coach, I want to just be around this with you. I want to take this all in and learn. I'll do it for free. And he was like, oh, great. Like, I'd love to have you on the staff to do it for free. But it just so happened that he sold his company for $140 million a few years prior. Well, more than a few years prior, like a couple decades prior, which allowed him the freedom to coach basketball. So not only did I learn about the game and how to coach, but I learned about business. He's like, if I call him, he's picking up on the first ring. He's like one of my mentors and really good friends. And that came from me giving, like, I'm going to give you what I got in my expertise. I'm going to do this for free with no expectation. And now his network has become my network. So I think there's a long story in there, but short to say, if you have a skill set, and you're just starting out, giving that skill set away for free for a period of time and showing people what you can do allows you to open up and get into rooms that you otherwise wouldn't be able to get in because you think that you're worth something because everyone wants to get paid. So I think that's the first thing for sure. There's many others, but that's the first thing that comes to mind.
Okay. Yeah, I love that. Give unconditionally, and then you never know, people will give back to you tenfold. Can you give us any specific examples of complementary skill sets or personality traits that you and Ryan may have together? Because everyone always talks about, if you really want to have a successful business partnership, you got to find someone who's really good at something you suck at and vice versa. So can you give any specific examples of how you and Ryan may have that?
Yeah, I think Ryan's adopted the integrator, and I have been the visionary. Like, I'm very much like, let's go do this. I don't know how it's going to work or how we're going to figure it out, but we will figure it out. And Ryan's like, can we build a system behind this so we know what's happening when this happens? And so there's no conflict because of that, but that is a complementary skill set. I'm kind of seeing the long-term vision and being like, I think we should pursue this aspect of our mentorship or our community. And Ryan's like, okay, well, when people come to us, we need to have A, B, C, D, E, F written out for them so that they know exactly what they're getting. So he has this, we're both the sales mindset and cap. We both have that. So it's good to both for growth, but he's adopted the integrator of all right, we need to have a system. We need to have a process. We need to have this in place so that we know where we're going, even though you're pointing us in the direction. What happens when we get there? How does it actually unfold? So I mean, that's kind of high level. The good news is that I think people should focus on what they really enjoy and what lights them up about business. Although there are things that I do, like the accounting side, that I don't love, but we're a small business and you have to wear those hats for a period of time. But there are people, you don't believe that there are, but there are people that actually love to do the things that you hate. And I've found some of those people. And I always thought, who the heck would like bookkeeping? Like, there are people that love bookkeeping and do bookkeeping. So you have to pursue the things that you enjoy doing and then fill in the gaps around that. And I think Ryan and I complement each other, but we're actually a lot more similar than we are different. So we've had to plug the holes and find the pieces of people that, whether that's a part-time basis or a podcast producer or somebody that can help us grow without, at this stage, having like multiple full-time employees. We're pretty lean.
Yeah, that's so good. How do you guys handle disagreements? I mean, I think it's very easy for people to just be like, the moment shit starts to hit the fan, be like, I'm out. So could you talk about maybe some difficult conversations you've had to have together, or just difficult points in your business where things got really rocky, and how did you handle that?
I think Ryan we both know that like his daughter's birthday is this weekend, right? So like I'm going to his house to celebrate his daughter's birthday. Like I would do anything for him and his family. So whenever disagreements come up, there's just underlying tone of like, this person wants what's best for me and wants what's best for my family. And if you can find a partner that like that is the thought process that they have, then the disagreements kind of go by the wayside. The other thing in being 50-50 partners that I think is very important is we have a business coach. So the business coach operates as that third party decision maker who can come in and say, if you guys disagree on this thing, this is what I think about it. And that's the third eye, if you will, or the third person, the one that can 2-to-1 vote somebody, and then we go with it. So hiring a business coach who can see the vision as well, and even at like a fractional, like we meet with him every week, but he has other, he's not just solely our business coach. He works with other small businesses. So that helps us through the disagreements. And to be honest, Ryan and I kind of know when to push and when to pull. Like he knows if I'm really gung-ho on something, that it's like, I'm going to let Cory ride with this, and then vice versa too. So I think it goes through ebbs and flows of your life, what's important for you at that time. When we started out neither of us had kids and a family, so his priorities have changed, and I totally understand that. He goes through seasons with his full-time job where he's more busy, so I have to lean in more. It comes down to a level of understanding. And not to say that there haven't been arguments, but we're pretty good about just over-communicating and hashing things out at the point that they bother you and not letting them fester up into something that's bigger than it really is.
Yeah. So what I've taken away from this so far is it's really, really important, just with all other aspects of life, to have extremely good communication first and foremost. That's extremely important. Second, with partnerships, it's really important to find someone who aligns with you on your values, your morals, your vision, all that stuff. Because when family comes, like for me, family is more important than anything. Like I want to level understanding if I want to go spend some time with my wife, whatever, that's allowed or whatever. And so I think those are definitely the most important things.
Yeah, you mentioned this, Lorenzo, we've had over just about 400 podcast episodes. And through that, we've created partnerships. Now, it's not like we partner with 400 people. We've partnered with 2. One didn't work out the best, but the second one is like the reason that we're able to continue to buy real estate at the level that we are, which we're buying, like we try to buy 1 property a quarter. We buy 5 to 20 unit multifamily in Vermont and New Hampshire that are value add multifamily. And our partner lives up there. He's boots on the ground, and he finds the deals. We help him underwrite. We manage investor relations. We manage a property manager together. He puts the financials together, and he manages the construction. So there's this very symbiotic relationship that happens. But that's not possible without us figuring out what are his morals and values. More important than anything that people talk about with the who does this well and who does that well. It comes down to all of that other stuff is figure outable if you know that this person will put you above the money. And I like say that like double clicking on that, putting your partnership above the money, because it doesn't matter. There's always another hill to climb. There's always more money to make. Comparison is the thief of joy. You'll find other partnerships that are doing it better. I just interviewed somebody on the podcast the other day that's making $5 million a year. Like, okay, like if I could get upset about the fact that I'm not at that level, or I could choose to learn pieces from what he's doing and just be better at what I'm doing with my partners. So a lot, I kind of went all over the place there, but my point is that what you said is true. Having this relationship that your morals and values matter over the dollars. That's key.
Yeah. One thing I love that you said in another podcast was, it's not the journey, it's not the destination, it's the company that you're with. And I couldn't agree more. It's all about doing cool shit with cool people and just building everything together.
I think I've interviewed so many people on my podcast, and so many people that are at levels significantly further ahead than me. And I interviewed somebody recently who was like chasing this $100 million number. And I asked him specifically, what's the why behind what you do? What's going to feel so good when you get to that number? And he like paused for a period of time where I was like, you all right? And he's like, no one's ever really asked me that question. I don't know why. I don't know the why. So I say this to say the company and being able to do it with people that you love and enjoy those experiences along the way is why we started to pursue financial freedom in the first place. So to just get to this arbitrary number in a bank account, if you're not happy along the way while you're doing it, you're not going to be happy when you make it. And then when you make it there, you're in rooms with people who are doing even bigger and better. So there's this balance between pursuit and enjoyment while you're doing it. But it comes down to exactly what you said, having the people around you that you can enjoy the process with and lift people up to your level, and then also pursue people at a higher level than you, but good people, being around good people. And I think if you put your message out there into the universe and you share your story, those people will naturally find you. That's what's happened for us.
Yeah, it's so good. So I want to pivot more to the podcast. So what was the point when the podcast entered the picture? Whose idea was it? What was the reasoning behind starting it?
The podcast entered the picture very early. April 2020, COVID hit, and I'm like, man, I'm not going to sit here and do nothing. I really want to continue to network. What's the best way for people to do that? Zoom was booming, all this stuff. I said, right, let's start this podcast. And he's like, Cory, if we're going to do a podcast, I need to know the reason why. Like, what's, again, the integrator in him? Like, how is this going to work? And I just said, look, people, in my opinion, like I listen to Bigger Pockets. I'm listening to people who have 1,000 units. They built it from 1985. It's hard to resonate. I really want, hopefully, someone to come along the journey with me and see all the mistakes that we're making. So we just laid it all out there, built in public, if you will, and just started it April 2020. Before you know it, we had a couple people that came on the podcast. Chad Carson was one that like I felt really great about. He said yes, which led to David Green, which led to Brandon Turner and all this. And when somebody like David Green was like, hey, you guys are kind of good at this. I'm like, well, that's all I needed to hear. Like the one person telling me that is the host of the Bigger Pockets podcast at the time. He said, we're kind of good at this. We must continue. So we started it as a passion project, but then it led itself into a full-fledged business. And before you know it, people started saying, hey, I saw you grew your portfolio to 10 units. I saw that you bought this 6 unit. I saw that you're growing even further than your original goals were. How are you doing it? So people started reaching out to say like, what's the secret? And I'm like, I can show you how to get your first couple deals because this is the mentor that I wish I had in the beginning. So the podcast, it was my idea in the beginning, but Ryan really like built it into a business. And for the first 100 episodes, it was just us trying to figure it out until we were like, okay, we had a certain downloads number. We had a certain level of guest on. The production value went up. We started to spend more money, but it started out literally on Zoom, no camera, like the little blue $50 microphone. So for anyone that's like hesitant to start out, don't worry about all the cameras and all this stuff. Just like start and build that along the way and that it'll grow. So I'm not saying we're at Chris Williamson or Joe Rogan level, but like I just love these types of conversations and it's something that I genuinely enjoy doing. So why not continue?
Yeah. I'm in the same boat as you. I love connecting with people like this. I think that's the best way to form genuine relationships with people. And so I want to talk about how you're able to get over that first episode, maybe the first 5, because I know for myself, there's always that fear of judgment from others. What do people think about me? Will my episode be good? And as we know, the first couple episodes are pretty shitty. And
do not go back and listen to our first episodes. Do not search it, please. Yeah, it's terrible. Yeah.
Yeah, but how'd you get over that fear of doing the first couple episodes? I think a lot of people maybe are looking to start podcasts. I know some who's like, I've been wanting to start a podcast for a year. And so how do you help people get to that first one?
You know, it's interesting. I didn't really have a fear behind what other people thought, to be honest with you. Like I care about what people think in my like circle around me, but I think that like I know I'm here for good. Like, and I don't mean that probably sounds like here for a long time. I mean, I'm here to be a good person, like to show people that I am good and that I mean well. And if I lead with that authenticity of not trying to be somebody that I'm not trying to say I'm a guru, listen to me, just trying to say, I think we've done some cool stuff. Like, check out our story and our journey. And I think it would resonate with you because if it can help spark a journey like it has for us, I think it can help you take those first couple steps. So I didn't really have a fear behind it. I was just like, man, I just want to share. I want to share the stuff that I've learned. Like, we had a property, our third property had burnt to the ground. A fire that, like, the worst possible thing that could happen with real estate. We had insurance that ended up working out, but like, what a story to be able to tell, like, to other people, a tale of caution, what to do, how to have insurance, who to call. Like, having that is what just ended up being great content. But I was never nervous about sharing the story or what people thought, because I was just consistently trying to be myself. I thought if I showed up for myself, there will be people that don't like me just because I'm me. That's okay. They can have that opinion. That's totally fine. That's their right. But there will be people that are like, oh, like, these guys are kind of cool. They're normal guys just trying to make it all happen, just trying to fight the good fight and bring wealth to their families. And I think if people saw that, they'd hopefully follow along. So, to be honest, there's not like a story of overcoming this big fear. It was just like, once I started, I knew, all right, I think I have something here. And then the more that you do it, the better you get. The better you become as a conversationalist, the more inquisitive you become, and the rest is history.
Yeah, that's so good. I know for me, there's always been that kind of fear of like judgment from others, but I know that it takes way more guts to be on here sharing yourself and being vulnerable than people who are just like the rage baiting warriors behind the screen, never posting anything. And so for me, that was always gave me some comfort, just knowing that I know it takes a lot of courage to do this.
People are going to like and or not like you regardless. So it's like, everyone has an opinion about other people. It's just kind of like nature. So if they're going to have an opinion, you might as well pursue something that you enjoy doing, and they're going to have that opinion anyway. And for me, it was just like, I want to be the person that people are like, oh, the Cory went for it. Like, he put it out there, and I don't know how long I'm going to be around for. Life is fleeting. So like, just give it everything that you have and at least try. And I don't know when trying became not cool. To be honest, I don't know. I mean, if you look at the internet, somehow trying became not cool, and just being nonchalant and not really caring. And that's not my personality. So the judgment's going to be there. So you might as well just pursue it anyway.
Yeah, for sure. Were there ever moments that felt like a grind doing the podcast? Because I know for me, my motivation definitely fluctuates. Some months I'll do an episode a week. Some months I'll do one episode a month. And so how have you and Ryan been able to stay consistent?
That's a really good question. I think I just told myself that I was going to do one podcast episode a week, regardless of my feelings. Now we do 2 a week. So I think the pursuit is kind of like the fun part. The progress to watch us get better has been the fun part. So once I started to have like bigger name guests on who said that we were doing a decent job, it just built this momentum. And now it's like just a repeatable part of every single week. And it's a built-in discipline, like going to the gym or like eating. Like, honestly, it's just like, we do the podcast, and like, I build myself up for it. And so I haven't had a motivation problem with it, because it's just been like it's kind of become a part of who I am and part of what I enjoy doing. But I think maybe that's the key, Lorenzo, is like, I really enjoy it. So like, making money is fun. Like, it can be fun, but like, if you're making money in a field that you don't really enjoy doing, I think that's when like the motivation starts to wane, and like, I'd rather make less money doing things that I really enjoy doing, because I don't know, that's what lights me up. That's the fun part. So to be honest with you, I think once I got through like the first 20 or 30 episodes, there wasn't a motivation issue to do it, because I knew that I was planting seeds with guests that I would eventually come back to and be able to have like build great long-lasting relationships. They'll remember the Juice guys. Like, they had this great conversation with them. Like, so I can call somebody in San Francisco or in Austin, hey, remember when you were on our podcast? Oh my God, yeah, that was great. We had a great time. We bonded. We built rapport. I knew I was planting seeds with a network. So my motivation was just to try to do that. So I never really waned, and maybe it will in the future. But maybe my thought process and my what I'll enjoy will change. But for now, it's just rolling. So I love it.
It's good you've made it a habit and a non-negotiable, and because you know that it feeds so much more into your other aspects of your business. And so I think that's great for people just getting started. So you've had 384 conversations with different guests so far. Is there a theme or pattern that you continue to see? Like what attributes do you see among those who are most successful?
Yeah, I don't want to be like cliche about this, but I think if people don't know what they want to do, like trying something for a long enough period of time to give yourself like a sample size of results that you can actually measure against yourself would be, and I say this like measure against your previous self, not against somebody else who's doing it maybe differently. But if you can like do something for a year, like truly a full year, and I mean consistently for a year, you can actually measure your results against your previous results. So the people have said, they've come on the podcast, and some people will say, hey, if you can't scale a business within 6 months, you suck. Okay, that's your lived experience. That's, for me, it took me longer than 6 months to try to scale a business, but some people will say it takes 5 years. I was told in the beginning of this game, this real estate game, you have to invest in real estate for the 5 to 10 year horizon. So I think that's business, that's life, that's anything that you do, pursue it. I say a year to figure out if you like it or enjoy it or if you're good at it. But in order to really see the fruits of your labor, in real estate, it takes 5 to 10 years. I'm in year 8 of investing in real estate, and I can confidently tell you the best deals I've ever done are just the longest to go. So it's the ones I did in the beginning that are bearing the most fruit. So if you pursue real estate or podcasting or business and your thought process is, I need to get rich in a year so I can sit on a beach, I just think that you're trying to shortcut a game that cannot be shortcut. That doesn't mean that you can't have big wins along the way. But if you stay humble and you keep doing it, the longer you do something, the better you get. And the more repetition that you get, the more you trust yourself. And the more you trust yourself, the more confident that you get. It's like a big revolving door of like building of the evolution of yourself. So that's kind of a lot in there, but I would say that it comes down to doing something consistently enough to know if you're actually going to be good. And if you only try things for 4 to 6 months at a time, you never really find out if you're going to be good at it at all. And that leads to like massive indecision and then not having confidence in anything if you just try things and then give up after they don't work. Similar to your story, you were like, hey, I'm going to do this house flip. I lost money on it. I lost money on my second one. Third one, I broke even. Okay, maybe I don't love this, but I learned so much. I'm going to pivot to this thing. Like you at least did it long enough to know I'm not afraid to make mistakes and that I learned what I'm good at, what I'm not good at, and it led me to this next fork in the road. But most people just give up after that first one. So a little bit long-winded, but I would say those are the messages that I hear from people that are really successful, that have been doing things for a long enough period of time.
Yeah, no, that's so good. Staying in it for the long game. There's no quick wins. Real estate's a long game, and even with the podcast too. If you're not going to commit to at least a year, minimum 3, like you're not going to see anything. So if you're not okay making money, that's what I say for myself too. Is if you're not okay making money for the first 3 to 5 years, don't even get into it. Because at least for me, that's totally true.
And making money directly through the podcast, that has taken 5 years. Yeah. Like actually sponsors, people that want to pay us to be spots on the show, people that want to pay us for like our Instagram has grown. So like sponsored posts, 5 years it's taken us to get people to the point where now we get a consistent flow of that. But I didn't even have any expectation of that when I just started. I just said like, let's share it. Let's see where it goes. You build momentum, you get more excited. And then you mentioned this on the podcast that we did together, like the progress becomes addicting in a way. Like that's the thing that I'm pursuing, is the progress, is the step up to the next step. So, but yeah, I mean, I wish I had like this magic pill that I could give your audience members, but it really is just doing things long enough that you like that you can get better at and build a skill set.
Mm-hmm. Yeah, you have to get into it. Just loving doing it before ever thinking about the money. If you get into it for the money right away, you're going to be disappointed very quickly. Okay, so walk me through you guys' actual strategy. I know you talked about doing a house hack for your very first one, and then you talked about doing multifamily. What does your portfolio actually look like, and how have you like decided to land on that specific like strategy?
Okay, so we started out building our portfolio. My goal was 1 property a year for 10 years when I started, because I thought after 10, and again, I'm in year 8, that I would have optionality to leave my job. The reality sets in is that 10 properties is not enough to leave your job, even if your cash flow starts at $200 to $300 a month and extends, because my cash flow on those properties that I bought 7 or 8 years ago is a lot more than $200 to $300 a month now. But I thought, okay, if that was my beginning stages process, I did a single family, a duplex, a triplex, another single family. I started out just playing real life Monopoly and trading up from a $200,000 property to a $500,000 property, and from a $500,000 property to an $800,000 property. But then I realized, the best way for us to grow is actually to go bigger and buy bigger deals. So Ryan and I partnered with our partner, Sean, who lives on the border of Vermont and New Hampshire, and it's an A- class area. The vacancy rate's 0.4%, and we buy 5 to 25 unit value-add multifamily with him through partnerships, through capital that we bring in through us and our existing friends, family, and network of people that are in our community. We try to buy 1 a quarter. We bought 3 properties in 2025, a 10 unit, 7 unit, and an 8 unit. So we're in the process of renovating them, refinancing, paying back our investors, and then holding for 5 to 7 years. That is our strategy now. And we found that it was actually, for us, just as easy to buy a 7 or 8 or a 10 unit as it was to buy a single family, but you have to start somewhere. And that's why we teach people how to get in their first deal, because no, you're not going to retire off your first deal. You're not even going to like feel a lot of the cash flow, but the tax benefits, the principal pay down, the appreciation is going to allow you to see the light. And once you see the light, once you get that first deal, that second deal is possible. And then when that second deal happens, you're like, oh my God, I can put this on autopilot and I can really build something over that 5 to 10 year time frame. So our strategy has changed, but we found the right people to build with. And I love partnerships because Sean's skill set and our skill set can come together and we can buy more property than we would be able to buy ourselves. So that's kind of the shift in it. But we had to figure out what worked and what didn't work. Like I have a short-term rental in Tampa, Florida that I get to use and escape and send my family down to when it's cold in the Philadelphia area. But I figured out quickly that Airbnb scaling that way was not the way that we were going to do it. Like I got into 3 or 4 Airbnbs and I realized, oh, this is a hospitality business. This is very different. There's a lot of things riding on it and guest reviews. So I wanted to keep that a small part of my portfolio. The thing that had worked for us was, I say mid-size, but it's really small multifamily because it's underneath institutional dollars. They're not going for the 5 to 20 units, but it's above the retail of somebody that's like trying to get their first house. So there's less competition. And when I say Vermont, New Hampshire to you, I would bet to say that you probably haven't heard of anybody investing there because everyone's talking about the Sun Belt or Phoenix or Texas or the Midwest. So we're trying to find areas that is not super high competition that we can really dig our heels in, and that we've landed there since 2023. We've been buying there. So again, that was a lot of explanation, but that's how our strategy has changed, and that's what we're focused on right now.
Yeah. So just to summarize, you started off with 1, kind of scaled up, went to a small multifamily, maybe a 4 unit, then an 8 unit, and now you got a 10 unit, maybe a 25 unit. So everyone kind of has to start with that first one. And then you said Vermont because you're trying to choose other areas where there may be less competition. Can you walk through some of the numbers of like maybe what? I have no idea what it costs to buy multifamily in Vermont, to be honest. So what's the most recent one cost?
Yeah, so I would say it's not anywhere near the numbers that you're seeing in your area. But when people hear these numbers, they're gonna be like, oh, that seems like an expensive, because we're near Dartmouth Health and Dartmouth College, and what's up there is a very big tech scene. Oracle has a headquarters up there, Strava, like the running company, the eds and meds are all there, and there is a severe undersupply of housing. Like they're 10,000 housing units short on pace for 2030, and they're not even close. So we're trying to buy properties and either add units to it or just bring everything up to market. So we're we bought an 18 unit for $2.4 million. We bought a 10 unit for $2 million in like an A class area. We bought a 7 and an 8 unit for just over $1 million. And the average rents on like a 2-bed up there are like $2,700 to $3,000. A 1-bed's like $2,000. So some of these are mixes of 1 and 2. So we're buying properties that are $400 to $500 under market rent, renovating them to like rental grade, but pretty nice. Some of them we furnish for midterm rentals for the traveling nurses that are in the area. Like it depends on the property. And we're bringing that up to market rent. So yeah, I would say, depending upon the exact location, like a 7 or an 8 unit is around $1 million. Like this 10 unit was $2 million because it was like fully renovated actually. But, it rents for $24,000 a month, So you're over the 1% rule in an area that is just consistently growing with restaurants and bars, and we want to make sure our tenant class is traveling professionals or working professionals, that the median income is like 90 to 100 grand in these areas. So I want to make sure that like our tenant class is repeatable, and if there's turnover, that's fine, but they're really taking care of these properties, and it's not like we're buying in like D class areas where the numbers may look good on paper, but collecting rent and doing all that is more difficult. So hopefully that answered your question on just some of the numbers behind the scenes.
Yeah. And for financing wise, you said that you put in some of your own money. Maybe you're raising a little bit from your community, close friends and family. So it's mostly just 506B, or is it just, are you structuring it as joint ventures?
We have done so we bought 5 properties so far since 2023. Again, we're trying to buy more, but sometimes the numbers are just not penciling out. But we have done 506Bs, and then one property we went 506B for the start, and then you can transition into a 506C if you haven't raised all the capital that it's required from your personal network and friends and family. You cannot go the opposite direction. You cannot start out as a C and then go back to a B, but you can start out as a B and go to a C. That's one property that we did that. But most of it is, 506B. People that I know in my network, people that have connected with us for a period of time on social media, that are in our inner circle, we call it, our community that we teach people how to buy. They buy their own. They can partner with us. There's advantages to that, but it has all been 506B for the most part.
How was your first time raising capital outside of maybe like 1 or 2 private money investors, but haven't done a big old raise yet for like a 506B? So can you talk about how that first looked for you? And do you think it would have been possible had you not had the podcast or the following on Instagram?
Negative percent chance that it's possible without the podcast. There's no way. And I'll tell you why, because people are wanted, and this is why I said for you, the flipping, like showing the losses, people trust that you're willing to lose your money. I would much rather lose my own money than investor capital. Are you kidding me? Like, without a doubt, like I'll take the bruises, and I have. I mean, that, like, I remember that first property I mentioned, it was literally raining inside my property because I didn't know that you needed to fix windows that were like not in the best shape. And I lost so much money, ended up recouping a lot of it after the repairs and the sale, but I was willing to share that and share my story. So people were like, they built the know, like, and trust. I trust Cory because he was willing to lose his money for 4, 5, 6 years before he even thought about taking investor capital. So the building in public and putting my message out there and sharing, like, all right, this is what we've done. We've done this successfully. We've done this not successfully. If you like what we're doing, this is what we're doing. But knowing that every investor that comes in and invests with us knows the risk of investing in real estate. It is not a 100% guarantee that you're going to make the projections that we're telling you. That's investing. You should be investing money that you're 100% willing to lose. Now, we have not lost investor capital, right? I wouldn't be very good at this if we have, but there's an understanding that, like, this is, who knew that interest rates were going to go from 4 to 7%? Who knew that we were going to go into, the war in Iran and oil was going to spike? There's a lot of things that you cannot control. COVID, I mean, oh my God, like, obviously. So if you build the trust over a period of time and you show up as yourself authentically, I think that was the thing that allowed us to raise capital actually a little bit easier than we originally thought. And now the ecosystem has grown where people really, really want to invest with us, especially W-2 employees, engineers, doctors, people that are working professionals that are like, I don't have time to go find these deals. I'd rather get double-digit returns backed by real estate with people that I trust that are just showing that they're normal guys trying to make it. So the capital raising aspect of it has become a skill set of ours that I feel that, like, it wasn't always that way, but now I take pride in, like, I'm going to make sure that our investors get paid back. That's really important to me.
Yeah, that's so good. I always tell people, social media is just your modern day resume. And even if you haven't raised capital yet, just share everything you're doing. Build in public, like you said. And even if you don't want to talk to the camera right away, maybe you just do like a B-roll video. You do text overlay. Just build that momentum of starting to post consistently, and then it'll help you build partnerships, build capital, whatever that may be, and trust at scale.
Yeah, I have just a quick example of somebody that, like, a friend of ours in the space who told me that he's been posting content for 5 years and he's grown his following. Like, that's all great. Like, the story and the front page of the newspaper is cool. But he told me that somebody randomly with, like, 3 posts and somebody that doesn't look like they post a lot on social media has been funding his flips for 4 years, has been funding millions of dollars worth of his flips because this person has been posting on social media. And it's not somebody that's, like, outwardly saying that they're doing that. They're kind of a behind the scenes person. But if this guy, I'm just not going to mention his name because I don't know if he wants me to talk about it, if he wasn't willing to post on social media, the guy that lives halfway across the country who met him through social media, how would he know? How would he know that this opportunity is available? And the guy's making 11% on his money because he found the gentleman who's flipping. So it's really powerful. And obviously there's people out there that you should not trust. And it's just the world that we live in, but find those people that you really resonate with, that kind of fit your vibe. And that's how I think the social media game can be. It can either be a distraction or it can be something that you use to build your life.
Segueing to the community, I mean, talking about finding your tribe and getting around other people who have the same mindset. You guys have your own community where you guys talk about the power of one. What does that mean to you guys, and what did your first deal actually look like?
Well, I would say this. If I had had somebody showing me the way in the beginning, looking over my shoulder saying, Cory, you shouldn't do this. You shouldn't make this move. You should make this move. Or that not getting your 10th property, but your first 1, 2, 3, 4. That is like the catalyst that really gets the ball rolling down the hill. And I've had so many coffee meetings, and I found, Lorenzo, that I was having a lot of the same conversations with people, and I was helping them, just showing them how to do it. So I realized if I could synthesize this information for people and really show them from my perspective what it looks like to analyze deals, what it looks like to build a team, what it looks like to build an actual sustainable business that can grow whatever pace you want it to grow at, so that you can have optionality in your life, that you can leave your job like I did. If I could synthesize that information and create an inner circle of people that were going after it, that you were around like-minded individuals, that you were seeing what was possible through real estate. Like an example, I have a good friend who's become a good friend of mine. He started out in our community, he had no units. Now he has 9 doors in 1 year, and he's building it all on the side of his W-2 job, and he's just crushing it. That to me is like, man, I can give back in this way. Yeah, it costs money to come into our community, but like the investment just gets 10x. So I think I started it out of need because the amount of people that were reaching out to me like, how do you do this? Teach me. And I always say this, there's a right fit for everyone. If you came to me with 12 doors and you're like, can you help me get to 50? There's somebody else that can help you better than that, for sure, without a doubt. But if you want to get your first few and you like really want to be around people that are just go-getters, that are out for good and really to help, that's kind of why we've built this. And it's been so fun because now I have a tribe of people that like, if we need capital, you can call, or partnerships have formed with people that didn't even know each other 6 months ago. It's beautiful. It really is. It's a really cool thing with the power of the internet. So that first deal, again, was the thing that springboarded us, and doing it right. I think most people will sit on the sidelines in analysis paralysis for years, not doing anything. If we can just get them over the hump to that first deal, again, not going to make you rich, but it's going to teach you all the things that can make you really wealthy in the long term, and gets me fired up. It's fun. I love it.
What's the one thing that moves the needle the most and gets people over that analysis paralysis and get that first deal?
Knowing that no matter how many times you analyze it, you will always and can always find a way that allows you to think that it won't make sense. Like I could make every deal not make sense for you if I thought about what if your house gets struck by lightning, Lorenzo? I mean, come on, dude. What if there's a tsunami and your house gets wiped out? Like, there are things that you can fabricate in your head. The key is when you have enough confidence of people that have seen what they're doing that allows you to push the go button and get started. And you can't do anything in a parked car. So I know I've kind of been a little bit repetitive on that, but I'm saying, like, if you're just willing to like get 75% of the way there with the information that you have and then go, I would have never you can't get to your 10th property without getting to your first. So you have to learn the fundamentals. I think when you feel like you have to go at it alone, that's what keeps people frozen. Having people around you that have done it and seen it, I think that makes it a little bit easier to make those decisions.
For sure. And for me, I could read 1,000 different books, listen to as many podcasts as I want, watch as many recorded videos. The first deal and everything that you go through, nothing will prepare you for it. So just your own experience is going to be the most insightful learning lessons that you'll ever learn. And so just get through the first one. And I promise I'm a testament. I've had 2 that have gone bad, 1 break even, and I'm still here and I'm looking for something bigger.
Yeah. And the thing is like the expectation that things will go wrong.
Yes.
Like, even though I mentioned that first deal I bought for $250,000, that's worth $415. So I built all this equity. I paid it down significantly. Like it allowed me to live for free. I mean, there were things that happened. Like, I came into the property on day 2 and the basement had 6 inches of water in the whole basement. Day 2, the first time I came in there, I was like, oh man, so I put in a French drain for X amount. I redid that. Like, but would you spend $3,000, $4,000, $5,000, $10,000 to have 250 in equity? Like, you just have to weigh out the things that will go wrong with the upside potential that you have. And the opportunity cost of sitting still and not doing something should scare you more than anything. And that's why I love real estate, because you can actually control it.
Exactly. So I want to talk about the W-2. I know you've left your job. I know Ryan's still in it. I'm in that kind of weird in-between where I have kind of 1 foot in, 1 foot out. At what point did you realize it was time to step away? And maybe what's keeping Ryan from stepping away from his? Because I'm always trying to help people understand whether it's a good idea to leave it or not. And I think everyone's situation is different. But if you have any insight on that.
Yeah, so his situation and my situation are a little bit different, a lot of it different. But I would say this, like, I've learned that the more risk I take, the luckier I get. Now, that does not come without like dips in income and like second guessing yourself and hard days, right? But I was at this pivotal moment. I worked for my family's business actually, and in the end of 2024, they ended up sunsetting the business. They ran it for 50 years. The goal was to sell it. They weren't able to sell it. And I thought to myself, this was not my thing to take over. My grandfather started it. My father and his brothers ran it. And it was successful in its own right, but never got to the point where they could really like exit the way that they thought. And I was like, this isn't my thing to take over. It's now or never for me, because it's only going to get harder when you have 4 kids or 3 kids, or you feel like you can't do it. So I said to myself, I'm going to bet on myself. I'm not going to get another job. I'm going to go make this happen. And I'm not saying that that's easy, but to me, it was just like, the more risk I take, the luckier I get. I kind of repeat saying that. I think for Ryan, Ryan wants to see the proof, but he's also really good at his W-2 job. So I would never knock on somebody that wants to keep it, because I know people that have kept their W-2 job for a really long time and kind of been able to put it in a place where they can work X amount of hours and then build this real estate portfolio on the side. Like if you came to me, you're trying to get your first few deals, keep your job as long as you can. That'll give you all the benefits of getting the loans and being able to have some stability. And then you build this portfolio on the side and allows you to grow. So I'm not like anti W-2. Just for me, my personality, I was like, I really wanted to go all in on this thing. There's no right or wrong answer. It's all about your personal situation and what feels right. But also at some point knowing that like you're never going to know until you try.
Yeah, I think eventually I'll get to that point. I was telling you, I think for me, I think allowing me to have patience when it comes to choosing a commercial property is big for me, because it just takes so long to get something under contract and even longer to close for a commercial property. So for me, it's allowing that and just not forcing me to a bad deal. But I think eventually I'll probably cut ties.
I think the W-2 world, people think it's safe. I think that's maybe like a misnomer. Like just the other day, Amazon laid off, Oracle laid off thousands and thousands of people. There are people that have climbed this ladder and making $300,000 a year and get laid off like it's nothing, because you're just a number in a division in a department. Not knocking it, because there is some level of mental safety that comes with it. But the interesting thing about entrepreneurship is that your ceiling is gone. So it's like unlimited potential, but your floor is also gone too. You can go to 0. So I think playing in that zone has been fun for me, but 2025 was a tough year. Like I'm not like, I had to like, I left at the end of 2024. 2025 was rough. Like I had to figure this all out, but just getting through the mud, 2026 has been so much better. So it's not for everyone. I will say that. Like that is okay. And there's nothing wrong. Like I said, I would never knock people that want to keep their job for a long period of time, but to me, it was like I never would realize my actual potential if I didn't leave it. But you don't have to.
For sure. So you're 300 episodes in, you got a successful real estate business, a coach community, and a great partnership. If you had to start all over again from 0, what would you do differently?
Man, I don't have any regrets. And this is a tough question, because I definitely didn't do everything perfect, but I probably would have just thought bigger sooner. But I really am happy with where I'm at and the stage that I'm at and the things that I've done. But I guess I wouldn't have second guessed any of the stuff that we're doing. I just would have said, okay, I bought my first couple properties. Maybe instead of the first 3 to 4 years being single family duplex, triplex, I probably would have done like, get my first deal, single family duplex. Okay, understand this. I can buy a 10 unit. Like even going quicker to the area that I'm at now, because I've now discovered looking back that it's not as harder. But the key thing here is making sure that you live below your means, especially to give yourself a runway as an entrepreneur, and especially to like not try to be somebody that you're not. Like you're only running your race. So if you live below your means and you stay humble and you house hack and you have a paid off car, like those are things that I did do that I'm so glad that I have done, because it allowed my compounding to really start. It's really hard to be like, make $200,000 and spend $195 and think that you're going to just like force your way into this financial freedom. Like you really got to create that gap. So that probably didn't totally answer your question, but like if I've had advice for anybody, it's just spend money on things that you really care about. And for me, it's like traveling, spending time with, going to the gym at noon. Like I really care about doing that. Like that's my time freedom, or spending time traveling with my fiance or my family. But I just don't care too much about the watches and the cars. I want a nice car, of course. Like, but I've been driving a paid off car for a while and it feels good to not have a payment. So I'm like, you kind of get in this rhythm with it. So I have an eye on a really nice car. Like I do want nice things. Everyone does, but like spend money on things that you really care about and then knock out all the other stuff and stay humble in that sense. If you can do that, you'll give yourself a lot more freedom to like take the chance. So there's a little bit there of I don't know if I answered your question, but there's a little bit there.
Lots of golden nuggets. It's so good for sure. Well, Cory, I appreciate you. Where can people find the Wealth Juice podcast? Where can they learn more if they want to be a part of your community?
Okay, so the best way to find us is on Instagram, actually, at Wealth Juice Official. Ryan and I share an account. We post every single day. I'm answering DMs. So if you have any questions about us or the community, feel free to shoot us a note there. The Wealth Juice podcast, wherever you listen to podcasts, Apple, Spotify, YouTube. That's the best way to connect with us. If you like the long form, go listen to our podcast. If you like the short form content, we're posting, like I said, every single day. Instagram is probably the best place to get in touch with us. If you have questions about the community, hit us up. We are, we're selective about who we bring into it, but like, if you're looking to get to that next level and maybe you have a 401k, you're working your job, you're trying to figure it out, but you really want real estate to be this thing that gets you to the next level, I'd be happy to have a conversation.
Awesome. Well, thanks for being on the show, Cory. Thank you for everyone who's listening. If you guys found any value from today's episode, please give a 5-star, share it with a friend, and follow Cory and Ryan on Instagram. Thank you guys for tuning in. See you guys on the next one.
Thanks, Lorenzo.